The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 19th day of September. Gosh, time flies. I know we're going one day at a time, but 19th of September already? All right. So thank you to our wonderful hosts here at TFNN, and that continues all the way through the day. Let's go to the numbers. Look at this. This is the E-mini. I need to do this because I always forget. I have it already. By the time I start the show, I've already been to about 4 or 5 different windows. This one here is very important because the E-mini is trading up 950 at 2142. This is the 10-minute chart. It completed a peak F in the Chapman Wave at 2144.25, round about 5:30 this morning. Pulls back fairly sharply down to the 2137, I think it was, 2138.50 level at 9:30. So it has a single leg spike to the upside to 2146.75 in the 10-minute bar. 1, 2, 3, 4 10-minute bars to the upside. That takes you to 10 past 10. And now it's giving back, and the pattern that we've seen so often, look, there it is, the uppercase A goes straight up, straight down. This is going to be very important. I still see some residual strength, but if the E-mini takes out 2139 support, I don't think it'll hold the 2138.50 low of 930. It'll go lower. So this is very important. My thinking right now is that there's just this wait and see attitude, and I would even put in a little rectangle formation here. So let's just watch that over the period of my show. All right, let's go on. So now here's the other question. Is this a dividend play in the XLF, the financials for my subscribers on those 10, 12, 13, 14, I don't know how many charts I sent over the weekend. I discussed the XLF and I showed that it was holding fairly well, but within the context of the daily chart, it really needed to hold the 2332 level. This is the S&P Select Financial Spider Fund. It closed on Friday at 2362, and it opens today at 1935. I would say that a 4-point drop is not a dividend play. There has to be a split or something's going on, and I tried to find it. I did a quick Google of it. I couldn't find anything. I even went here to my trade station. I went right here to news. Let me see, I'll do it one more time. Maybe it's delayed news. News, and we've got XLF, and it says there were no headlines found. Waiting for new headlines. Yeah, we're also waiting for new headlines. How could that be? That's not a dividend. 10%. They don't pay 10%. It's like maybe 2% or 1 point something percent, surely, if that. Something's wrong. It must be a recomposition. Correct. Yes, Duffy. Recomposition of the XLF. Something is going on. Look, GS, which is Goldman Sachs, the heavyweight there. TGS, what is that? That was a mistake. Transportation. Transportadora de Gas. ADS. Look at that. Write it down in notebook. I love serendipity because it takes you to places you would not have gone. A 669, beautiful chart, up 32 cents in leg A, B, C, seen the daily, but I don't think it has much volume. Yeah, it's very, very light, 12,000, 182,000, very light volume. But keep it in mind, folks, for those of you trading your own portfolios, that's not a bad one. Let's go back. Where was I going to go? I was going to go to Goldman Sachs. Symbol is GS. Up $1.99 to 167.99. Look at Bank of America. Look at Citibank. Citibank is up 63 cents. Look at BAC, Bank of America, 1572, up 23 cents. I don't know what's going on, but it must have been reconfigured. That's a shame because now I have to go through all these charts again. But wait, reconfigured means you don't start off at a brand new low price. All right. The whole thing has to be reconfigured. Maybe by tomorrow I'll have something else. All I can say is that the XLF on a monthly basis wasn't great, but it was holding okay. The fact that we were looking for, at least from our subscribers, we were looking for a little bit of a trade to the upside as a test of the XLF strength if the yields broke down. if the bonds broke down and the yields shot up, you got that. You got bonds coming down and yields shot up. And lo and behold, the XLF dropped for about 3-4 days. So now this is something completely different. Well, what do you do if you've got a stop in place? It's very uncomfortable. Thank goodness we had no trade right now. If you owned XLF, you now own 3 ETFs. Oh, they split into other ones? Why would they do that? There was the BKE. You've got a whole bunch as it is. You've got the regionals. Buckle. That was not right. XLB, BKX, XLE. No, not XLE. Why am I forgetting it? This is the regionals. Regionals are, someone will tell me. XLF I've got. What are the regionals? Within that they've split them to financials, regionals, and insurance. Oh, insurance as well, separate. Yeah, KRE. That's what I was looking for. Thank you. In the den. Yes, KRE made a peak, G's pulled back, made a peak E in the weekly, and a B in the monthly. Monthly still looks very good. All right, let's just move on, because this is, when they reconfigure, it reconfigures everybody's mind. So you have to think about this in a little different way now. Let's go on. So now we've got INDU. The Dow is up 101 at 18,225. It's not a great chart pattern. The MACD and stochastic were very weak even Friday. And we haven't yet, have we just gone? Yes, 18,250.11 and 18,254.88. We just started a gray leg B to the upside. One of the reasons why we are still short in the Dow, 1-to-1 short the Dow. But one of the reasons why the 3 times I had a couple of questions about it, and really I have no choice. Over the weekend, I had a number of comments, and I also spent a little time talking about my Trader's Corner, how I perceive what it can do, etc. But most importantly, if the QQQ, I'm going to do this right now. Let me just do this because I'm thinking about it right at this moment and I'm liable to forget. The QQQ has had a really good session Thursday and Friday, 2 sessions Thursday and Friday. Even today, it's gone a little bit higher. At 117.39, all it needs to do is go to 118.13, and I have to consider that as a recycle to the upside. Number one. Number two is the IBB, which is really a big help to the QQQs, had a very interesting 4 sessions last week. Today's the 4th session. 3 sessions, today's the 4th sessions, and it's gone to 293.83. And I believe that the pattern has now changed. I'm looking more favorably at the IBB, at least in the short. I'm not sure I can call it intermediate term, but I'm talking about the next couple of weeks. Why? It's held really well. It refused to hold under the 9-period moving average in the weekly. It refused to make the H to a lowercase m pattern by plunging into the 272 level. Instead, the 273.50 area held, and now it's bounced strongly back. And that's suggesting that, yes, you could still get an arch formation, but there's internal strength that needs to be worked out. And if it goes to 299.49, this is the IBB, the iShares NASDAQ biotech sector, I just have no choice but to consider that this leg 4, wave 4 in both Chapman Wave and Elliott Wave to the upside is still in place, and that's what we have to look for. Looking at the GC, gold is at 13.17, up 7. The dollar's pulled back a little bit, had a really nice session on Friday, and that's good. They're alternating. Gold and the dollar are just rotating every other day. The one is up, the other is down. I'll be back. We'll talk about bonds a little bit more, and I'll talk about some of the aspects to the market that I think are positive and what's not.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I just want to show this picture. This is, if Tammy doesn't mind, I hope you don't mind. Tammy from the Den, she just sent this to us to have a look. This is from Reno. It was, she took pictures, and these are just beautiful, beautiful pictures. And the Blue Angels. Now, the reason why I wanted to show this is that you might recall that every now and again I speak about the market, and I always have a visual picture in my mind. But it's not always easy to articulate because it's a visual picture. But what I say is that I'm looking at, say, the Dow stocks, and I see them peeling off one by one, and only one is leading. Or I'm looking at the NASDAQ, and the sectors are peeling off one by one, and it's only, say, whatever it is, the high techs that are holding well. So this is a beautiful picture. This just kind of explains, look, you had your, I'm sure that they were in a V-shaped formation, and whoosh, they peel off, and you've got one left there. That's the way I think of the market very often. In fact, the reason why this is such a difficult period, first of all, that's what I wanted to mention, use that image, which is exactly in my mind, to demonstrate what I'm looking at in the marketplace, but at the same time, it is a spectacular thing to see this kind of precision, this kind of dexterity, the articulation of these median points where is such split-second timing. There is no room for error. It's spectacular to see that. And it's also very noisy. And if, like, we once were going to Tanglewood here in the Berkshires, where the Boston Symphony Orchestra plays, and it was a rehearsal for Saturday morning for the Sunday afternoon concert, not this year, I think it was 2 years ago, and we just happened to be in a lot of traffic. And why was there traffic? That's because there was an air show in an airport near Worcester, Mass. On the way. So, was that a long line? Anyway, so here we go. There was somebody in there, QQQ in the Den said, X, turnaround. So I looked at a lot of these stocks, and one of the reasons why I said to subscribers, look, I'm going to keep, I have to keep stops in place. And the question was, wait a minute, if you thought we were going down so sharp, we had the 3 times short the Dow, why are we a little fuzzy here? And there were 3 reasons. The most important being, I like to keep the stops tight, because if you're wrong, especially with 3 times, you can really get hurt. So like a 20-cent stop on a 15 or 16 or whatever it is dollar instrument, I think that's very good. In this case, we made some money, and we can always get back in. That's number one. Number two is within the context of the market. If Friday, I'm going to come back to the to U.S. Steel right now, which is the symbol X. I'll talk about it. I've also got a caller waiting. Let me just do this because it's really important. Look at the Qs. The action last week, if it was instead of being down Thursday and Friday, if it was down that amount, then I would have been really comfortable just holding the short position and saying, okay, Dow and S&P are going to be dragged up by the Qs if they are strong, but the downside will be exacerbated if the Qs and the IBB and the XLK, look at this, the IBB, how strong it is here at 94.49. If the XLK, which had a really strong session, and that's the S&P Select Spiders Fund, and the SMHs were very, and look at that, the SMHs went to a high, and I can't ignore that. That was wrong. That should have been down. It was up. So that's the reason why I don't see this. There's no bravura here. This is where we want to. When we get it right, we will get it right. We'll make a lot of money. And like we have with the Alta Salon, which is down from the 270 that we were short, and it's at 234 right now in just weeks. It's fine. I don't mind. So here we go. So that was the question about the QQQ. And now just real quickly, I will go to, I'll go to Scott. I'm sorry, Scott. There we go. All right, Scott, wanted to know about AA. It fits right into the category that we're in right now. I should actually have gone to Scott right away. I'm sorry, Scott. But I just thought that was a question. It was such an important question. I needed to get to it, and you're an important person, so I'm going to go to this right now. AA spiked up this morning. That's Alcoa. It's at 9.44 right now. It's unchanged. Now it's down 1 penny. But the reason why I'm avoiding stocks like Alcoa right now, even for the pop-up, is in AA, the downside is so powerful in the daily, and the weekly is right getting close to support in the 9 area, that I just think this is momentary bounces. Look at X, which is US Steel, another one that Scott in Safety Harbor likes to look at. It's now, this one's acting very well. It's up $1.21 at 17.11. But look at the concerted down move. The 9-period exponential moving average was unbelievable resistance. Not once since it broke down. This is US Steel. Since it broke down, it made that peak 2764 peak E top in the Chapman Wave on the 29th of July. And then when it broke the 9-period moving average on the 9th of August, went from 2564 under, it went to 2405. Not once, except today is the first time it's actually tried to break above the 9-period exponential wall. It touched it many times, but it just kept failing. So this is the first time that I'm looking at some, and the stochastic's flat. It's not great, but it's flat. And the MACD's kind of flat. I think this is just a bounce. You can get a nice trade, 17. If you got it early this morning at the opening at 16.44, which I wouldn't be surprised if Scott bought somewhere around there. You could hold this. Oh no, he was looking at Alco, but this would be one with a bounce. And I just think at this moment I have to consider that it's a bounce. All this move to the upside when you really don't know how the Fed's going to act on Tuesday, Wednesday, when they have the meeting, and then on the announcement. This is risky play. I would prefer to have our core position in the short Dow, try holding it there. So far, because it deteriorates just a little at the close each day, our stock is not as great as it should be, but the price is still nicely higher than where we got in for the 1-to-1 short. That's the way we have to deal with it. So here's X. Look, GE, same thing. I looked at GE. I did a whole report that I did over the weekend on GE. It did the 1-to-1 to the downside. It's kind of complete. It does probably have to touch 1917, which was the low that was made back on the back in June. And it might just have to touch that one more time. But the weekly is still very weak. These can only be considered right now bounces. I wanted to go long BG, Bungie. Bungie Limited. This is an agribusiness and food company. I spent a lot of time on the weekend on a couple of stocks that I really looked at positively. And then I said, no, wait a minute. This looks to me like it's the weekly chart is just not saying you're there. The daily could pop. And there are a lot of stocks like that. So I'm just suggesting right now, you've got to be careful. Don't get too carried away. Here's the 110. I did show that, right? 110 with that uppercase A, Eiffel Tower, straight up, straight down. And we're watching this real closely. If there can be a later, if there can be a bounce, fine. But at this point, I'm suggesting to you, you can't be a hero. I mean, we had two stocks. One was a $10-ish stock, and one is about an $8-ish stock. We had one yesterday on Friday, and the low of the day was our stop, and we got stopped out for a little bit of a gain. It's a pity because I really wanted it, but in this market, I don't think I want to be stranded with an overnight cascade to the downside. And if there's an overnight cascade to the upside, which in a sense there was today, I'm not sure they're going to last to the upside. That's my thinking. So let me do this one more time. I didn't finish the TLT, so let's just go to the TLT as we're going into the second break. Look, the TLT is suggesting that the weekly chart has a lot of weakness in it, and I'll do the TNX when we get back, and that's the 10-year, and I'll show you something very interesting. Basil Chapman, Tiger, Technicians Hour, and we're looking at a Dow 97, S&P's up 10.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman. So this is it, the TNX, which is the 10-year yield. Oh, and thank you, a lot of people, and especially Bob, for sending me over the REITs were removed from the S&P financials into 11th group. 11th group, okay. And then KRE, which is a regional bank, up today, seeing put sellers today, and a short squeeze and a question about Intel. Let me get to all of that. I just want to talk about this. There is a buy mode in the daily 10-year yield. There is a buy mode in the 10-year weekly yield. But the monthly chart suggests that 17.22 to 1720s to 30s is very strong resistance. At this particular point, what I'm looking at is that let me go through this here. I get an email from someone, I don't know him, I never heard of him or anything like that. And then years ago, he just sent this thing, Ed Moncrief is his name. And he sends this, he used to do a Dow call every day, and then and talk about the economy. But I think this all fits in right now with what we're looking at. So he sends us Sunday, September the 18th, 2016, current economic conditions list. 1, world government debt, 61.3 trillion. 2, U.S. government debt, 19.4 trillion. U.S. number 3, U.S. Fed balance sheet, minus 4.48, sorry. U.S. government debt, these were trillions. Did I say trillion? Yeah, billion, trillion, yeah, it doesn't make any difference to us, right? It's grains of sand. So these are all trillions. U.S. Fed balance sheet, minus 4.5 trillion. Now, this is important. Derivative market debt, 550 trillion. For derivative market debt, number 4, that's a derivative market debt. Global corporate debt, 51 trillion. So wait a minute, you've got 10 times more debt in the derivative than the global corporate debt, and then the negative yielding bonds are 13.4 trillion. So I'm looking at this, and then he goes on to say, student auto loan debt, 2.4 trillion. America's trusted media goes through a whole thing. U.S. corporate earnings dropped for 5 straight quarters. Corporate defaults, 2016. It's 122. In 2009, it was 170. Number of new businesses collapsing, a bad sign. Then he goes on with a whole bunch of things with a tremendous number of concerns. So I always look at this. A U.S. trade deficit is minus 39.50 billion. So today, out of in the Boston Globe, there's like a huge, in the editorial section, I should have had it in front of me, there's this huge thing by Jeff Sachs. He used to live just around the corner. So Jeff Sachs, I think now I'm not sure where he's stationed, but he's the head of some organization. And he is extremely liberal. And I always follow his views. And he had the very first, the Globe, I guess, has assigned him a 9 series distribution of his thoughts. And the first one, there were some things that were very interesting, and some things I just disagreed. I thought his premise was just completely wrong, because the premise where in your mind you've already kind of, that's the way you think. So therefore, everything you're doing is along the way you think for this particular theme. So I just said, okay, fine. I didn't expect anything much. I remember hearing him here. He had a talk in Newton. I remember hearing him and saying, geez, interesting guy, but I don't know if he's ever run a business, and even now he's running a fund that's subsidized by others. So thoughts are fantastic and brilliant economic metrics, etc. Except I think they are misread or misguided at some time. And now I'm reading this whole thing, and he's talking about the debt. I will do it tomorrow because I wanted to show subscribers. I wanted to show the chart. Of course, the chart is just going up and up and up and up. But his premise is that we're not getting enough income. What does he mean by income? You're not taxing enough. That's basically it. So he wants to tax our way through good health and good everything. Now, maybe it can work, because it does work in some countries. And he's got a happy index as well. And we're like 13th on the happy list. And you've got Canada and Scandinavia and all that stuff in the happy list. So I'm intrigued. I have my own opinion, but I'm always wanting to listen, because you can always learn from other people's thoughts. So I'm going to be going through this carefully, and I'm going to make my own decisions about it. But I will tomorrow. Either I'll show the chart tomorrow, or I will show it to my subscribers. But it's a very interesting chart, because it basically continues screaming to the upside. And he says you're not going to change it, not with tax cuts, absolutely, and not with Hillary Clinton's way of doing it, because she's way too mild. You've got to do some serious, basically taxing, revenue they call it. Okay. And I'm going to be watching this very closely. So now this brings me to the TNX. If I'm correct in assuming from the what I'm looking at in different areas that there is going to be a market, there's already some kind of a market slowdown. I believe it's in the automobile sector. Look, these General Motors, GE, Ford, they just can't get off the ground. UFAU, is that right? No. FCAU, that's the Chrysler Fiat Group, Fiat Chrysler. Nothing. There's nothing there. Something tells me, and then of course if you look at AZO, which is the auto parts, look at this. This says people have been buying new cars. They don't have to buy spare parts anymore. So what I'm thinking about is, in terms of the auto parts, I think it's telling us that things are going on. That there was an incredible 17 million cars, automobiles were sold, trucks and cars, I guess, and now there's a bit of a slowdown. I think that's what we're looking at, and that says to me that the Fed could very well talk about raising rates in December, and that makes the March-April period where, Marty Zweig, brilliant Marty Zweig, used to say it's the third rate hike that you got to be careful of, and that fits into the whole scenario of the first quarter of next year, which might be one of the more dangerous periods. Maybe second quarter, but this is next year, 2017, could be something serious. And that says to me that the Japanization of our bond yields might go on for a while, even if there is a little bit of a bump. In fact, they've got the bump right now. If they raise a quarter point, it's going to be a quarter point over and above what we've already experienced. No, I think that it's going to ameliorate some of the rise. And if you look at the HGX, Scott, are you back, Scott?
Yes, Basil.
I'm sorry, I didn't get you. I didn't realize you had a battery issue with your cell phone.
What an confusing morning. Here we have bombs going off all over Manhattan and New Jersey, and the market goes up. The VIX goes down.
Years ago, when I used to do cartoons, and especially my financial cartoons, I used to draw them. I had a cartoon when bonds were really, reals were skyrocketing up into the 17% area. And of course, that's yields. The bonds were way down. I had a little cartoon that said, this lady and the husband, they were always the people, the characters that I used for my cartoons. She said something to him about, rates are very high. And he said, yeah, it's because of the bond fund. And of course, you can't use a joke like that anymore. But
yeah, no, absolutely not.
Definitely the bond fund at that time.
I mean, you can. There's things like articles on potash, for instance. The merger's going to, be great for potash. Potash goes down today.
Yeah, you know what? Do you have enough battery to hold on a second? I wanted to go through a couple of things in that area, in the agri area and commodities. Great. We've got Scott holding on. We'll be back with commodities straight after this. Basil Chapman, Ignitions Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So, yeah, we're back again, and we're on with Scott in Safety Harbor, Florida. And so, Scott, this is what I wanted to just do with you. If we're looking at, say, AGU, which is the Agrium, I believe it's called.
Right.
Agrium Inc., the whippiness and the constant pullback towards it can spike up into the 90s, but boom, it comes right back down into the 80s again, and it keeps doing that over and over. What happens is at a certain point, what you get are rising highs and a flat base. That flat base, at some point, if it doesn't break down, and that's really the key, can produce a fabulous upside move because it's really building a key level of support. I keep waving my hands in this horizontal position.
I agree completely.
So in the case of potash, what we had is, now, as far as mergers are concerned, that's a sticking point because I've seen over the years where sometimes a merger creates not just a double effect, but a triple effect. It might not occur right away, but when you put all the different component parts together, it is so much bigger as one unit than it is in the parts. This is when some companies, when they split, they become greater for the parts, at least for a period of time, than they were as one consistent whole. Now, the big thing is I'm a chartist, and I look at potash and I say, well, maybe that's true, but there are absolutely levels of support that we need to watch. At 1591, that's okay, but it popped up today to 1609. It's giving it back. It's having a real struggle, and the stochastic is so weak at 3%. Yes, you could get a bounce, but it's going to take a lot to get it even into the double digits in the tens, let alone.
Basil, I see the volume that you see, so there is people out there, but out of a vast amount of people that I know and talk to in chat rooms and everything else, not one of them, including professional traders, have anything to do with potash for some reason.
And probably that's the same thing, the same as with many of the commodity areas. In fact, the commodity area is one of the areas, and I'm sure someone like Larry Pesavento has followed it for so long. When you look at this chart, you will see this is potash. There was nobody even interested back in 2006, early 2007. But once potash, back in, I would say, February, March of 2007, soon as it started to break into the 20s, it became the hot area. The same thing with
people are buying. They're on the theory of buying on strength, kind of like back when I was trying to get people to buy CMEX when it was 380 and 4. Couldn't get anybody interested. Then when it was 5, 6, 7, people were saying, "Oh, what do you think about CMEX?" I'm like, "Well, it's the same company, folks."
Okay, so now what we have. So Scott, think of what happened in gold. Back in 2008, I think maybe Tom O'Brien was one of the few people talking about gold. Nobody was really talking about gold. And then all of a sudden it started to climb. But basically, people only got really interested in gold, I would say, in the middle part of 2010. Then it started to be the hot thing. And when it screamed to that peak F top back in September of 2011, everybody was interested. So,
you see,
yes.
I agree with all that, these theories of buying on strength when it comes to restaurant chains and so forth. But when I see commodities beaten down, and that's how I made as big money as you know this past year, because I got on X when no one wanted it. I got on CX. I got on Alcoa.
Correct.
And again, Alcoa is beaten down today, yet there's a plethora of articles about all these wonderful things that are going to be transpiring.
And especially with Boeing, right? And I think the Iranians are now looking for deals with Boeing. So, yeah.
But
so
interestingly enough, X is up today.
So, yeah, so they're rotating. So now what you've got to do is you've got to keep your eye on both Alcoa and U.S. Steel, because that's how you like to play it. And you know that very often you pick one and then you'll move to the other. So
Correct.
don't think that because you chose the one that isn't participating today that they can't work. I do think they're going to work, but I would say for a person like you, this is great. You want to play the pop-ups. You don't want to hang on for too long. So this is only a case where we spoke about it before, something like a potash, which is in the commodity area, potash, other minerals, Saskatchewan. I would suggest to you that when it gets towards the 1550 to 1530 area, that's where you start to get the biggest risk reward benefit, because at that point it's making a base. You know that if potash takes out, closes below 1521, the low of the 29th of July, you're going to have to hold off because the 1464
That's
is the next level of support.
mark, yeah. Mm-hmm.
Yeah, so that's what. So I think you've got your eye. It just today you didn't choose. Well, the day's young.
Basil,
Anything
speaking
can
of
happen.
potash, isn't it interesting that us Americans, at least, I don't know about other countries, put such a low priority on the food industry and how it's manufactured and the whole process of it? We're just teetering on starvation. People don't understand this. I mean, I have relatives in farming in Iowa and Minnesota. We're teetering on starvation every day. They don't even realize that how close we are every day to everything going bad. And no one seems to be concerned about their food sources.
That's an interesting point. Yeah, that's an interesting point. Well, so anyway, Scott, keep your eye on both of them, and I would treat them only as trades. This is not a position play at this point, as far as I can see right now. Hey, thanks for calling. Thanks for calling back.
Watch out for the election, Basil.
I'm watching it before.
Don't hold anything 2 weeks before and 2 weeks after. I would be scared to hold anything at that period of time.
Keep it in mind. Okay, thank you for calling. So, folks, let's do this. We're going to look at the transportations. The Allegheny had what I'm looking at are charts that have had spectacular runs, and they are on my short list. When you look at Allegheny transportation area, so it's 519 right now. It's up 444, but it made an all-time high at 553.48 back in July. And now it's pulling back with a doji-type candle. It's right on the 9-period moving average with another week and a half, whatever it is, to go. And it's the sell mode in the weekly. I've been looking at certain stocks and saying, okay, you've had a spectacular run, just like this one that we had spoken about before, which should be having a bounce. Yep, it's having a nice bounce today. It's up 2. Alta Salon, look at that monthly chart. Look at what did I feature today. Oh, look at that one. It was AWK. Let me see if I usually remember the symbols and I forget what the stock is. Yep. You remember I spoke about this a while back, and I kept berating myself that I never got subscribers into it, because all you had to do was just buy it and say, hey, I'm holding it. This is the first time American Waterworks Company is at a peak G in the monthly. It's at a tremendous pullback, one of the deepest pullbacks in just 2 months that it's ever had, and in price, that is. So it goes to 85.24 in July, same as the last stock we looked at was Allegheny, and now it's pulled back sharply. But look at the weekly. The weekly is making that uppercase letter A, the Eiffel Tower, a decline. If it closes under 71.93, oh, this is AWK. I just need to clarify what I'm looking at. AWK is American Water Works trading at 74.89, up 56 cents today. If it closes under that low of May at 71.93, if it closes 2 weeks out of 3 below it, not only is it in the sell mode, that would be the first time that I'd be looking at it to probably impact the monthly with a sell signal. And that's incredible. This is a stock that's gone from the 20s to the 85 area in a straight up move. So I'm looking at stocks like that to say, hey, are they telling us something? Is there rotation going on? I'll be back straight after this break.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So WTR, another one was brought to my attention. Aqua America trading at 30.28, up 21 cents. Look, like the stocks we were just talking about when I was speaking with Scott, sharp pullback, and all of a sudden it's this little pop-up, but this pop-up looks like it's just a bounce within a downtrend. That's just the way it looks at this particular point. And it had a spectacular move going from the teens, mid-teens, all the way to 36, a double. And now it's just taking a well-earned breather, Aqua America. So I want you to do a couple of things. We've just got a moment here. So Intel was a question. So Intel, look, this is very unusual. I must say that out of, I'd like to say a million charts. I'm sure that I've done, I don't know how, I've been doing this hand charting from the 1980s. I don't know how many charts I've done, right? But I don't recall ever seeing a gap like this in this particular configuration. Normally, I would put in a rectangle because it's just outlined it so quickly. I'm looking at Intel. There's a beautiful rectangle from the big pop-up to that peak F. Perfect decline after the 20th of July with the general market. The 20th was at peak C, remember? And then it pulls back, and all it does is it goes in the rectangle formation. Rectangle formations, I always say, if you can identify them, see an inside. Usually it's in a shorter time frame, but it could be in the regular one where you expect an inside Chapman Wave buy mode going to a peak A, B, C. If the low holds, that is, it did. And it went to peak A, B, C, and then it powers out, goes to a D, and I always say it goes just under, right on, or just above, and that's where you got to be careful. This one went a little bit higher. And then it pulled back, and it made what I would have considered over the weekend, well, on Thursday, I would have put this rectangle in like that. I would have said, hey, there's a rectangle, right? Another one. Instead, what happens is we get another gap on Friday, and now it's giving some of that back up. This, if I'm identifying correctly, in Intel at 38.05, looks to me like it could very well turn into a rogue wave. I haven't got time to explain what the rogue wave is, but just the words imply exactly what it is. Out of the blue, the technicals are failing and the price jumps up without recognizing that the technicals are failing. And the stochastics at 72%, the MACD did pop up, the on-balance volume and the histogram are negative. So this says to me, be careful. There could be something going on here that's really messing around with everyone's thinking. I think right now we're in quite a big cash position. But it happened that way, but I feel very comfortable with it. Personally, I would have loved to have kept our 3 times long the Dow, but we're quite heavily short the Dow at this point. In any case, 18,005, about 18,580 is where we did short. It isn't quite reflected in the way that the ETF works, but it's the best we got. I think that we're going to be pulling back. Maybe there's a little more to the upside, but you've got to be careful for a sudden pullback. And there are just too many weekly charts that need a little more work. So Intel is acting very well, but like the SMHs, it has this funny pattern. And I put a question mark over the weekend. I think I forgot to show this. I did the work, but I forgot to show it over the weekend, that there's a question mark. What is this? Is this a D completion? Because that low 62.49 was the low, and it went all the way to a G up at the 67-ish area, 67.14 area, and today's high is only 67.68. It's not that much higher. Is this a rogue wave? Have we extended in the weekly chart as well to leg F? So I'm going to be doing my homework here. If you want to be short, there's plenty of time to be shorting. If you want to be long, selectively long, we've got stocks that I still like a lot on the long side. And there are stocks that we're preparing for the shorts. We would like them to pop up a little bit more to add them to our short list. No big deal. Got a little time. We have patience. So have patience. There's no need to rush. When the trend is defined by Thursday, Friday, you'll be able to put on more positions either way. At this point, I think we're somewhat overbought. And there's a bounce that I said, the Chapman Wave trend gauge reflected on Friday that we should have a strong pop-up, and now we've got to see what happens. Basil Chapman, Tiger Technicians Hour. Check out my opening call. I think you'll find it interesting. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TF TFNN.